Hi guys, this is Lee with the Market Sense for the week of March 26th, 2019. The charts in this presentation are provided to us by the Trade Navigator software and Gettess Financial Technologies in Colorado. And this is our bond market, the weekly chart of the bond market. And you can see last week we finally got this breakout we were looking for. We said if they went above 147 it would be significant. They did a little better than that. And so what that leaves us this week is it leaves us a potential target up here above 150. And notice I call that a target. I'm not telling you that they can't turn down from there. They certainly could. But that's a very high-risk sell, so I don't consider it resistance. When you get a breakout move like this, it can really fly. So there's a ton of risk in selling it. I have no interest in doing that. The far more interesting thing is the support down here at the upper moving average, which is about 147.08 this week. As long as they can stay above that, and as you can see, they've come nowhere near it so far. As long as they can stay above that, they should be considered to still be trending up hard, whether they reach the target this week or not. They could still be considered trending up hard, and you should look for more upside, well, until further notice, kind of. Now, the way markets move often is they will come back and test this area, which is kind of like the mid 146 area. At some point, they may come test that and bounce off of it again. But for this week, I wouldn't even expect them to get that far down. And it won't be surprising at all if they just remain between support and resistance and consolidate this big move up. But as you can see, they've already gone higher, so they'll be consolidating at higher prices. All in all, this is very positive for the bond market. Maybe not so positive for the overall economy, but positive for the bond market, and we'll have to see if anything happens to change this. In stocks, it's kind of heartening to see that after last week had a big turnaround and closed near the low after making new highs for the move. We don't have a whole lot of follow through here. They did follow through, they did go lower, but the middle moving average here is just below 2,800 and they seem to be back trading above that comfortably. So that's a rather positive sign. Now we've got an area of resistance here that, it's sort of wide. It runs from about 28.27 up to 28.64. So that's a pretty wide area there. But in that zone, if they can hold there, they still have the ability to turn back down. And of course, going to the lower moving average below 27.60 wouldn't be any surprise at all. But that area is kind of critical there. If they can get back above that, they won't necessarily make new highs, but that'll actually look pretty good and look like a pretty fair recovery after looking so weak last week. Of course, anytime any bar, I don't care what time frame chart you're looking at, any bar that closes right on the low, if that doesn't smoke right down again the next bar, that often indicates that they've kind of exhausted themselves to the downside, kind of run out of bullets, if you will. And it's not surprising to see a bounce here. So if they bounce and don't trade above this resistance, then we could look for them to turn back down again next week. But for now, I think you just have to be impressed that they didn't just continue to plummet and that they have apparently held just below 2,800 here and seem to be trying to work higher. That's a positive sign. At least the world's not falling apart just yet. So that's what we've got for you today. I hope you can find something profitable to get your